Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and thanks for joining us again after a break over the holidays and obviously into the new year. Happy New Year, everyone. We're going to talk about today, as we talk about once a week, every Tuesday at noon. We're going to cover off what's been going on in the markets, what we see coming ahead. But to kick things off this year, we're going to really review last year to some extent. We're not going to dive into everything. Obviously, a lot of stuff happened in 2020. We're going to talk a little bit about what's going on in 2021 and what we see for this year up ahead. And I hope everyone had a great break. As always, everything we cover here is for information purposes only. Don't take anything as advice or that it might pertain to your individual situation, but always see a professional, do your own due diligence before applying any of this to your portfolios. As always, everyone is unique, and you should always see how it might fit in or how this information might help you out with your portfolio strategies. So for those of you who are on our live at noon today, we are using Zoom, so you can, if you have any questions, by all means, if you move your cursor around, you'll see that Q&A button, and you can type in that question. We'll try to get to it today. I think today's going to be a bit longer, just because there's so much to cover, but we'll try to get to the Q&A today. If not, of course, we will follow up with you with answers to your questions. If you're watching on the replay or a question comes up to you afterwards, or maybe you're watching or listening to it on our new podcast, this will be available through podcast as well. If you want to listen to it on the drive home, you can definitely reach us. Go to mikeonmoney.com is our portal there. You can send us messages, you can book appointments, and you can see all our other videos and different educational pieces that we put out on a regular basis. So with that, let's jump into things. Before we dive in too much into 2020, I do want to say a few things about 2020 on one of the more positive notes. That might not make it into what's impacted the markets or what's happened in this year. Obviously, from a personal perspective, I kind of would like to reflect, how fortunate myself and my family's been with 2020. Yes, we didn't get to travel. We're definitely, played more board games than we've ever played in our lives as we've stayed at home, a little bit of cabin fever. But we've been really fortunate. While we have known some people who have been affected by the pandemic, whether it be economically or health-wise, we've been pretty fortunate to be insulated from that. And I know a lot of you have as well. But I wanted to just kind of recognize that, 2020, as difficult was, and as we go into 2021 here, I just wanted to kind of express how happy I was and my family are that we so far done fairly well with that. Other things last year, some great, on the positive notes, I just want to touch on a few of them. I mean, there were some great advancements in space exploration, obviously with SpaceX making trips up, but also we got samples back from the dark side of the moon and more missions being planned due to technological advances and abilities to move those things forward. We had Netflix, of course, keeping us all going through this. Early pandemic seems like forever ago. Tiger King, of course, keeping us all entertained for the first couple of months. Comfy clothes has made a resurgence. As you can see, I'm wearing my new trademark sweaters. I think I have an inventory of these things now. I don't know how many exactly I have, but we've been able to enjoy things. In fact, one of my New Year's resolution is to not wear track pants as often as I did in 2020. So another good positive out of 2020. Restaurants who adapted so well. I know we're going to touch on how they were affected in 2020, but they came out, they adapted with the home delivery and those home meal kits, which I think were amazing, and I hope those continue. Obviously, the appreciation we see for healthcare workers and teachers who are on the front line dealing with this. just seeing how hard they work and the stress that they're going through, and everybody out there who were, vital to getting us through, so far what we've seen in the pandemic. People at home, becoming more active at home, spending more time with the family, or at least the immediate family has been great. People cooking more. We had that whole early on, people making breads and everything. The pet pandemic, or the pandemic pets, everyone out there getting pets, which is great for pets out there, that all the shelters are pretty much empty. My family, ourselves, we got a new pup in June to join our older pup, and it's been a great time for us to spend time with the pup, get him exercised and get all this training done at home and all those things. So with 2020, there were some good things going on, and before I dive into what we've actually seen in 2020, I just wanted to highlight some of those things, because there were some crazy things going on in 2020. Of course, the pandemic started in March. Before that, it was largely contained to China. We had other things on our mind. Things out there like the impeachment. Do you remember the first impeachment? Or we'll talk a little bit about the potential second impeachment of this president. But we were in the middle of the impeachment. We had the forest fires out in Australia. That's the potential conflict with Iran. All those things started off prior to we even go into the March shutdown. So there was a lot of concerns, which is why our portfolios were so heavy cash going into this. There were a lot of negatives out there, potential recessions in 2020. So that's where we started off with 2020. Of course, the major event that kind of came in was the infections over in China starting to spread, but still light concerns until mid-March, where it really started to pick up, and eventually move into South Korea, and then of course North America, and taking over here. I think our shutdown of our office occurred, but March 11th or to 15th, somewhere in there. I remember it being just in mid-March there. So what happened? Well, we shut down the economy pretty aggressively, right? With the S&P 500 lost over a third of its value in 1 month, or a 30% decline. One of the biggest, quickest drops in the markets that we've ever seen. Companies were decimated. Things like OpenTable, looking at restaurants, the restaurant industry went from 80 billion in valuations down to 51. Travel companies like Allegiant went from 2.7 billion down to 1.4. Live Nation Entertainment, so that's your concerts and all that, going from 16 billion down to 9. Marriott Hotels dropping dramatically. The airlines, of course, Delta Airlines going from 37 billion down to 17 billion. Just a decimation across the hospitality travel industry in particular. The cruise lines obviously seriously affected. Do you remember all those floating around and people being trapped, not being in ports, not accepting them into, to dock in fear that, more spread would happen. But also, as we saw in the U.S., specifically the U.S. president, you specifically saying they didn't want them to dock in the U.S. because that would immediately increase the number of people infected in the U.S. And that was early stages. And keep in mind, those were early stages in very low numbers, but most of those low numbers were actually impacted because we didn't have testing facilities yet. So obviously, with no testing, the numbers are low. As testing picked up, we started to see the real impact there. Of course, we saw the sports industries shut down, the entertainment industry shut down, all those things closing in that early March, and the pains was felt pretty quickly. But what did lockdown life bring for us? Well, one of the side effects, we're going to talk a little bit more because it is lasting to some extent, and a growing movement, is we saw, lower air pollution as cities like Vienna and Lisbon and Istanbul, and in the US, San Fran and Washington, even here in Canada, in Montreal and Europe, Paris, London, as the cases went up and the lockdown happened, air quality got better. And if you remember back in March, April, in Vienna, in Venice, we saw, the canals being cleared and dolphins coming back. And even in our coastal harbors, the whales migration routes increased with the lower shipping traffic. All good things happened, kind of from an environmental standpoint right off the bat. And a lot of that stuck. A lot of countries have used that as a launching point to increase, let's call it clean tech as a broad movement, but, renewable energies. And we're going to talk more about that as we look into 2021 and what that means. So that, a little bit of positive there as we went into that massive shutdown around the world. On the bad side, we saw historic job losses in April. Of course, with shutdown, there was layoffs, and a lot of those jobs have not returned, especially around that hospitality industry and travel industry. So we saw 22 million in the US alone file for jobless claims, roughly 10 times higher than previous peak unemployment in absolute terms. But that wasn't limited to the United States. Australia, 25 million, Chile's 20 million. These are smaller countries. Taiwan, 23 million. Canada ourselves, we went up into the low double digits in unemployment. The US went into the low, Europe, everyone went into double digits unemployment. Kind of stalled that economy right down again. And we have to give credit in 2020 to the governments, I think, not just here in Canada and the US. I mean, obviously, it's always focused on the US because those are the bigger numbers. But a lot of the countries that learned, one thing they learned from 2008 financial crisis was not to wait to bring financial stimulus packages to shore things up, because if you do, the pain lasts longer. It's a longer recovery. So rather than spending a little amount of, the same amount of money, but over a longer period of time, the government's jumped right in with early stimulus care packages. The US have, of course, their CARE Act. Canada, we had our CERB. They jumped on it really early. And the US spent $2 trillion. Canada spent over $200 billion, just in direct support. There were other tax reliefs. There were other different territorial acts or money's being spent to strengthen the critical care systems and get those personal protective equipment to those who need it, especially in the medical fields. Remember, we had a shortage, right? The PPE, the doctors and nurses weren't able to get access to what they needed, especially in the US where the pandemic hit hard and fast. Canada, we flattened, remember the term, flatten the curve. We did a bit better job up here in Canada, especially in the early waves. We didn't get as bad, but there was a lot of money spent to make sure that if it did get bad in the second wave, we were better prepared for it. And we're seeing that obviously now. And that just, now we're heading into those second round of packages, obviously with the US new government coming in. They just came out with a small second relief package. It's not really being counted as one because they're expected another one to come out here when the new US government takes over to be much larger and more impactful in the long run. The world works from home. So we all started working from home. So, we saw things take off like this technology we're using right now with Zoom. Back in December 2019, Zoom had 10 million subscribers. By April 2020, they were over 300 million subscribers. So, just that growth in people working remotely, people doing things like this. We, of course, started this in March, doing our weekly live updates to keep everyone informed. It's been a great tool that technology's moved. But what you've seen is tech companies, and here's an example of, Zoom's valuation at the time, we're talking back last year now, it's even more now, went up to almost 49 billion in valuations, which is more than some, the top 7 airlines with Southwest, Delta, United, Lufthansa, American Airlines, Air France, AIG. All their valuations combined was less than Zoom after this. So, this movement to working remotely has had a lot of positives. Some of the benefits is the flexible work schedule, which was great, especially for parents with younger kids. I feel, I talked about feel fortunate. I feel fortunate. I have teenagers. They don't want me around. So it's mostly, they were self-sufficient during, they both had school at home or remotely. So, but I didn't have to care for them. But, parents have smaller kids, having that flexibility around their schedules was great. Working from any location. So that was good for families. Obviously, you didn't have to all be in one, location. Or if you wanted to, go to your cabin or anywhere you had internet connection, obviously you could work from. Taking that commute out, has been very positive for a lot of people. Productivity actually went up a bit with people not having to drive back and forth every day, being able to get straight to work. Time with the family, obviously there's a lot of, I know through the summer, think about 2020 through the summer, all those garden projects, all those home projects, me and my boys built a new shed, a big custom shed in the backyard, more than we needed, but it was, we had the time. So it was good to spend time with them and do something like that we can see the progress move along together. Working from home, obviously a big benefit, be able to manage the house a bit better. And I'm sure everyone has their own unique benefits from working from home. Now, struggles, well, unplugging from work is a big one. I've heard a lot. I know in my industry, it's always a bit of a challenge. When I leave the office, my family will admit that, I'm not unplugged at night because there's always information coming out and market stuff to deal with. But for a lot of people, when you leave the office and you go home and then you're disconnected. But I've heard a lot of stories, and I can certainly see from my own experience. Sure, you get up from your workspace at a certain time, but then, you're walking past and you think about something, you're like, oh, I can do that really quickly, and you go back and work again. So that's, a bit of a negative, not being able to get away from work, especially because there's not much else to do. Loneliness, depending on your situation, there's a lot of people who live on their own, and, being in the pandemic and isolated, not having that, or even if you're very used to social contact. I certainly, I've teased Luby through this whole pandemic. We do work from the office a couple days a week. I'm in the office today, but that's been good for us as a team to get together. I know if you know Luby, one of our team members, she's very social. Many times I talked to her when she was at home, and I know she was very antsy to get back into the office again, just for that social interaction, and understandable, we all need that. Collaboration, not having that collaborative or communicative environment on a minute by minute, hour by hour basis was a drawback. Distractions at home, it's really easy to get distracted at home. As I mentioned, we had a new puppy and I have an older dog. They would come into my office and, want to play or things. It's easy to get distracted a bit. And again, going back to people who had younger kids, obviously super easy to get distracted. Different time zones depending on where your team are. There's a lot of managing. My oldest son goes to McGill in Montreal. He did stay in Montreal for a lot of time. He is back home right now. This morning he was up at I think like 4:45 to get ready for a 5:30 class. So dealing with those time zones. I know some of his friends who go to European schools. Those time zones are even more exaggerated. Staying motivated. Some people have had a bit of challenge, being focused on work, without that reminder of other people around and the activity. Obviously a challenge for some. Taking vacation time, right? Not being able to take vacation time. Or if you do want to take vacation time, it's a drawback because you're stuck at home. Why not? And why not work, of course. And a little bit of technology, reliable Wi-Fi, depending on which area you live in, or especially more rural communities don't always have that reliable Wi-Fi. So a lot of drawbacks, a lot of positives that we saw in 2020 around that stuff. Tesla being a big story of 2020. Again, we looked at this. Tesla up 375% from June 19th. Now that just went into the beginning of the pandemic. I think that was June 2020. So it's even gone up further since then. Obviously, Elon Musk, Tesla, the major shareholder and CEO of Tesla, being the richest individual in the world nowadays. with that massive growth. In fact, it's grown to be larger than the 7 biggest car companies, and now I think it's eclipsed the entire industry as far as valuations. I did a whole video on Tesla during 2020 to talk about that growth. And I'll fully admit I was wrong in sense of saying I thought it was overvalued back then. It obviously has grown. I will, though, argue that I was right for the reasoning to say that is wrong. I don't think its valuation is warranted, but an amazing growth story to see around that. And that's going to lend into kind of our conversations a bit about 2021 and what we see to happen. Certainly not just Tesla, but that market as a whole. And that all goes back to that environment. People became a lot more environmentally conscious. A lot of the other car manufacturers did not see, sales even maintained. I mean, Tesla's didn't really increase over too much. They maintained a bit, but that was better than a lot of the other car manufacturers, or certainly the fossil fuel cars, gasoline cars and diesel lost a lot of market share in 2020. So we saw the shortest bear market in history. So, if you followed it, as I mentioned earlier, the S&P fell about 30%, 34% right away in March. Your portfolios, if you're with us, did not drop that much, of course. We had a lot of that cash. I think I'm going from memory now. It seems so long ago. I think we're about 30. We're above 30%. I think we're about 34% cash going into the downturn. So that put us in a much better position of only falling about 10, anywhere between 7 and 10%, depending on your risk levels, and being able to take advantage of that drop. If we look back at 87, the amount of days, and this is the drop. So this is not till it got back to where it was, but that it started moving, was 482 trading days versus the COVID-19 only 117 trading days. The 2001 dot-com bubble, 1,800 days. The global financial crisis of 2008, just shy of 1,400 days. Nixon shock in the OPEC oil embargo, almost 1,900 days. And then Black Tuesday, the great crash, lasted 7,250 days. So very quick turnaround, and that goes to that lesson I mentioned earlier that the government's learned about stimulus package, because the only thing that brought the economy or brought the markets out of that was those stimulus packages. We can tear apart country by country, piece by piece. Did they do it right? Did they do it properly? And I think history is going to judge differently. Some things are going to be good, and some things are going to be bad. I think they reacted, very positively in the sense they did it quickly. It's impossible to get it right when you're acting that quickly with so many unknowns. And they're still trying to adapt. And here in Canada, we hear about people who collected some of the benefits are getting letters saying they owe it back. They still are trying to correct some of the errors or trying to get it right. But it was that fast action that kind of saved things. So I credit them for that. And I also credit them in the sense that it would have been impossible to get things perfect given the time allotted to get it done and get it out. And by the way, in 2020, we might have had a U.S. election, or we might have seen a U.S. election. It might have just barely ended by 2021. But some significant things about that is the amount of money that was spent in 2020's U.S. election. $13 billion was spent, which is double. 2016's election was only about $7 billion. And the big shift there, the Republicans spent about $1 billion more than 2016, but the Democrats spent about $5 billion more than they did in 2016. Really going hard to get people out to the polls, get people out to support, where they thought it lacked in 2016, especially on the Democratic side. And that came out in the numbers, Trump getting 74 million votes, I think, versus 50 some odd in 2016. And the Democrats, Biden getting, I think, correct me, 83, 84 billion in votes, or million in votes, sorry, again, versus that 52, 53, in 2016. So they were really trying to mobilize the voters and get them out. And obviously the difficulty of doing that during a pandemic, they spend a lot more money. And we saw the fundraiser, a lot of people willing to fund, promote and invest in the election, with Biden being the first candidate ever to raise $1 billion for an election, and Trump raised just shy of 600 million. So, a lot of money was invested into this election, even by donations. The vaccine, good thing out of 2020, came out in December. Of course, we've got the two major ones, the Pfizer one being 95% effective, and the Moderna 94.5% being effective through their trials. Has been rolled out in a lot of countries. The production has been ramped up. I think I heard this morning Canada secured another 70 million doses to come in here shortly. The big challenge we're having now is getting it to people. Getting it out to the facilities and getting people into the facilities and get the vaccine. It's been a little slow in certain areas. Some countries have done better. Availability is increasing. You see Canada here in this chart. If you're watching this on video, Canada's sitting just below the 80%, kind of effective. Who will, as fast, how quickly we can get it. The numbers are getting better, and hopefully more and more people can get it. We can move towards what new normal is going to be. I'm not going to say normal. I'm going to avoid that word because I don't know what that's going to look like. But that's just going to be, we talk about, countries like Canada and the US and Europe, the UK is doing a great job of getting out there. Australia's doing a great job of getting it out there. We're seeing more and more, but it has to be a global effort to get back to what we want to call our new normal. Obviously, going back to those industries really affected travel. Travel is not going to be viable unless, the major part of the world or the globe is able to get the vaccine out and the populations vaccinated. And it's not just getting the vaccines, it's not just the rollout of the vaccines, but we all have to look at those who are willing to get it. And there is some pushback. Obviously a lot of reasons. This is new. It was quick. It's a very different science. I've talked about it in previous ones, the mRNA science, where it's basically injecting instructions to your body to go make the antibodies that can fight the coronavirus or the COVID-19 virus, as opposed to our traditional vaccines that actually inject a weakened strain of the virus and trains our bodies. So one is actually telling your body to make the antibodies. The other one is training your body to make the antibodies. So very different approaches. Never been done on a mass vaccine. The science has been around for a long time, but never used on the mass vaccine. But that research that's gone into that is leaping forward other things. For example, I've read our next round of flu vaccines next year might use this science, which would actually make the vaccine protective, the flu vaccine protective of all flu strains, as opposed to our current one, which only focuses on the most common strain of the flu for that year. So that science has left us forward. So great things coming out in 2020 with the vaccine coming out and putting us into 2021, which of course we know 2021 rolled over and everything became perfect January 1. We're all great. The world's great. And I'm lying, of course, because 26 days into 2021, of course, we had the riots or the protests into Washington, into the Capitol buildings. It's still challenging the election, and all these things going on in the U.S. specifically. Of course, we've seen new spikes in the infection rates. We've seen shutdowns, here in Canada. Quebec's got a curfew. Ontario just announced this morning, so I didn't read if it was a hard 8 p.m. curfew, but all establishments, all stores have to be closed by 8 p.m. They've put in more and more restrictions, and I think those are going into February or early March. So, Ontario going into big lockdowns. Here in BC, of course, we're still fairly limited, and that's been extended to February 5th. with not being able to get together with people outside our immediate family or immediate household groups. So all those challenges remain. Hopefully the numbers here improve in January. I'm actually optimistic, and most people who've talked to me about this know that I haven't been overly optimistic about us coming out of this, but I'm starting to get more optimistic, and I'll dive into that when we talk about what we see in 2021. So we started off January a little bit slower. Wall Street slipped off its record highs. Just concerns of the second wave or third wave or continuing wave, whatever you want to call it these days. A little concerned, obviously, what happened in Washington. Maybe not a concern enough. I think the markets, didn't react that badly. I think the markets were very focused on the next stimulus package. Treasury yields grew a little bit. Interest rates went up a little bit. On the buy side, not necessarily not the Fed. They didn't raise rates. Higher dollar, the U.S. gained a little bit. Again, this is out of the gates. It's back down a little bit more today, but it gained a little tiny bit. And really, that's just reversing. Last year was definitely a negative trend. Gold went a little bit lower with the higher dollar, but not by much, and that's reversed again since. I'll talk a little bit more. And again, oil went down slowly, briefly. In fact, oil's making a surge. We're going to talk a lot more about oil as we look at 2021. Of course, the Labor Department is looking to release its job openings. That's one of the things we watch very closely is how many jobs lost, how many gained. The December numbers for jobs lost actually up, reversing the trend that we saw through the fall, both in Canada and the US. Not surprising with that second wave. Of course, there's been more closures again. Although the National Federation of Independent Business is scheduled to release their Optimism index for December, which came in at 101 back in November, but really ignore the number, which direction it's going. But business optimism has been rising. As I said, even myself, a bit of a pessimistic through some of this stuff. Things are starting to look a little bit better. We're going to talk more about that. GM and other executives are really scrambling or running to, get their sweeping changes, innovative changes to deploy more than 1 million electric vehicles by 2025. This is not a direct response to necessarily Tesla's success in 2020, but an ongoing trend that we'll talk, again further when I get into different sectors here. So top news: Twitter tumbles. The shares came off. I think it was 12%. As they banned Trump from Twitter, and so did Facebook, so did Instagram, which is owned by Facebook, and basically social media as a whole kind of banned him after the accusations that he incited the riots that occurred. But really the tumble wasn't so much on Trump. I know it's kind of being accredited to Trump, but they also went out afterwards and closed down at least 70,000 other accounts around the QAnon conspiracies or the claims that the election was fraud. So all that affected them. I think that's a knee-jerk reaction in the market. Not that I'd jump on and buy Twitter, but I do think there was probably an oversell-off based on that, given that those users alone haven't had a major impact to their business model. EU's out there trying to get more vaccines. They're a little bit further behind. The UK has been probably one of the best as far as securing the vaccines and starting to get them deployed. They were the first ones to approve the Pfizer to the market. So now we're seeing countries around the world, especially in the EU, jumping to try to find other companies that can manufacture it, and they're looking at Valerna and a company called Novavax, which was a U.S. company early on into that technology. They didn't get theirs out of the trials out for approval as fast as the other two, but we're starting to see other companies kind of get into the fold. We talked about that last year. This was not going to be a one company effort. There's no way that any company was going to be able to produce 14 billion, 7 billion population times 2 vaccines in the time frame that that we want to get it out there. So we're going to see more and more of this. We're going to see more and more companies coming out with their versions of the same technology, the same version of the vaccine. very quickly here. Tesla's out there looking for design chief in China. They're looking to expand, of course, on the success that they have. So they want to start to compete into China, and they're also looking into India, where those are, population-wise bigger markets. They're also, per capita, the number of electric cars are far higher than we see here in North America. In North America, we always look at, all the technological advances and things that we do, but we're actually behind, especially in the US, when it comes to green technologies, or call it non-fossil fuel technologies. And that's just, we're more mature. Whenever you're introducing something new, it's easier for people who didn't have one before just to go to the new technology versus, change from what, the infrastructure from before. So obviously, we have a lot of gas stations to convert those to fast chargers, or, offer those options takes more time. So we're a little bit behind. So Tesla's obviously looking to expand, but also, this gets to we talk about electric cars. China has many more manufacturers and producing much more. Or it's a company called which is coming to North America and into Europe in 2021 here. They've got SUVs. They've just launched a new sedan that's being, rave reviews as being, I guess it's all opinion, but nicer than the Tesla as far as the sedan goes, and much cheaper in the price point. So they're moving into North America. They're moving into Europe. So Tesla, of course, wants to go onto their stomping ground and try to take some market share there as well. And that's one of the things when I talk about, the valuations of Tesla. They're facing a lot of competition. It's not just Nia. We've got Rivian coming in with an SUV into North America. There's Badger, which is Nikola, which is another electric car manufacturer coming in. And all these companies are also vying for the truck industry, the delivery trucks, the big rigs, the transport trucks, so which is a much more profitable marketplace than the individual car profit margins are on there. And that's not including Volvo coming in with their Polestar brand to North America. And on top of that, as I mentioned, Volkswagen's got an aggressive line, Toyota's got an aggressive line, Ford, Mercedes, BMW, they all have aggressive electric car manufacturers coming out, or car lineup coming out, in this year, next year, more and more. And that's all going to be competition to Tesla as that price point also pushes down dramatically. Parler is a social media app that is suing Amazon. If you have not followed this story, so this goes to the political strife that we've seen, that we mentioned there with Twitter. So after Parler's been used a lot by those right-wing groups to talk about, the election fraud, the QAnon conspiracies, and all these different things. It was kind of the hub for that kind of speech. You could have had it on, the Apple Store, the Google Store, and it was hosted on the web, Amazon's web servers. And after what happened in Washington, Apple dropped them for hate speech and for inciting the riots. Google followed suit. Everyone followed suit, basically. And then finally, Amazon, who hosted their site, who hosted the technology, closed it down on their server. So now you're having them sue Amazon basically for shutting them down. So it's not surprising. We might even see more of that around the Twitter shutdowns and the Facebook shutdowns. So this is a controversy. Remember, this goes back for months prior to this, going into the election. Social media, kind of talking about false claims, talking about, modified videos. They're in a conundrum, and I'll throw this out to you guys for comments, and I'd love to hear your opinions. Should social media be a mediator? Should they shut down, lies or misleading information, or should it be open source? Like, just post whatever you want, and people believe what they want. Yeah, and this did not start with politics. I mean, this goes back to the anti-vax movement, back in 2018 and 2019, being an issue around misinformation being spread and potentially misguiding people. So I don't think this is going away. Obviously, it's come to the forefront in politics here, and with the election, and obviously what's going on right now down there. So coming up in Canada, I was reviewing the slides and I love the first line there. No major event scheduled. They're never scheduled these days, right? Like everything seems to come up out of nowhere. I heard the comment the other day. I won't take credit for it, but someone saying, I would like to not have any more once in a lifetime events in 2021 would be great, because we've had so many in the last year. But we do have some things going on in Canada. Obviously business sentiment has turned positive. I mentioned that. Bank of Canada's survey has been out there to see how businesses are doing and how they're recovering. Now, this is a bit of a survivorship issue, though. We always see this in investing when we talk about indexes and past performance. If you try to say, well, if I had done this, how would my returns have been looking backwards, is that those who didn't survive aren't there. So what we're seeing, the business sentiment has turned positive, which is good. It means 2021 is looking great, but it has also taken out the businesses that didn't make it, right? Or the ones that had to close or file bankruptcy because they're not in that survey anymore. So there is that survivorship, kind of bend to that survey. But that goes back to, I kind of mentioned earlier on, I think on videos, certainly in talking to people, this pandemic, for all the pain and all the things it's wrought, when I talk about economy and businesses, it is a bit like a forest fire. It is damaging, it is destructive, but from that new green growth comes out. And we're certainly, this is a prime example of that new green growth. We're seeing that optimism as new ideas, new innovation comes into industry. So that, 2021, I really look positive with that. TD's battling a case right now on a Stanford Ponzi scheme. So this goes back to an Antigua Bank, a former Texas financier, Robert Allen Stanford, who ran a Ponzi scheme, lost about $4.5 billion, and the lawyers are going after them in a Canadian court to try to get that back. Will they be successful? Not sure. Toronto or TD will get through that. Not to belittle, obviously, some investors were badly damaged. And that's something to always be, cautious of. Always be careful of things being too good. Basically do that due diligence around things, and that's just an example. Canadian CEOs forecast for 2021, 2022. Strength following, the 2020 being a challenging year. And let's dive into that. That's a deep conversation we want to talk about. So let's talk about the US dollar. So it stalled a bit Monday, after seeing a little bit of bounce positive. Really what we see here is a negative US dollar continue. This goes to the inflation. This goes to printing money, the stimulus packages. We are expecting that bigger stimulus package with Joe Biden coming in, the Democrats taking. Obviously, they now have the House and the Senate. So they're going to be able to push forward, most things that they want to push through. The Senate's still pretty tight, 50-50 with the VP Kamala Harris being the tiebreaker. So they can get things through as long as they've got the Democratic Party behind them. But it's still going to keep them a little bit in check for any extreme measures. But we do expect that stimulus package to be a bit more generous. They are talking about that $2,000 check to Americans, where the last one was $600, up in that to $2,000. So we are looking at the weakness of the US dollar. Canadian dollar has probably been overvalued, but it's probably going to continue to be that into the mid-new year, so mid-2021. We've seen estimates as high as kind of an 83-cent Canadian dollar. So, if you want to buy US dollars for travel in the second half of this year, that's positive for us when we're just talking about the dollar. The sterling, which I have liked for a while, just because they're coming out of Brexit. The sterling had been devalued with all the problems they had with Brexit. Those negotiations are coming to an end, thankfully. They've still got a few hurdles to get over, but they have tentative deals in place, which is good. There's still a bit of negativity around the sterling, just as the Bank of England won't say they won't go into negative interest rates post-Brexit trade deal and economy as they try to come out of this. But as those fears go away, or as that outlook goes away, I think the sterling's going to do well with a strong bounce back. The current lockdown, is notably deteriorating the short-term economic outlook, but it's also fueling the speculation on more monetary easing. So keep those interest rates low, see strong approval down the road. So, that leads to my outlook being much more positive for 2021. Is do keep in mind that the markets don't trade on what's happening today, unless it's negative news. Positive news, the markets are trading on what it expects to do. So you do have to be a little bit early, and it is a bit of that. It's always darkest before dawn. So when things look the worst, when we have what's called capitulation, sorry, a capitulation where everyone thinks, oh no, it's not going to recover, it's not going to recover. It is going to recover, and it's going to recover quickly. It fell quickly, it's going to recover quickly. As I mentioned, we saw a little bit pushing down on the 10-year bond yield, and that goes to interest rates. The U.S. Fed, the Canadian Central Canada, Bank of Canada, the Bank of India, every major bank in the world is basically saying that they're going to try to keep interest rates where they are. They've said for 3 years. I mentioned this before. I think that's a lofty goal to fight off inflation without using interest rates. I give it a year to year and a half, which is still enough time of liquidity to be positive. Oil, we actually saw it rise a bit to over $50 today. And those of you who've been following me, I know I've been off for about a month of doing these. My view has changed a bit, and it is that what I just said, that darkest before the dawn. So in December in the portfolios, we did move back into oils very lightly. We're just wading into the water. I think it's going to improve over this beginning of the year, looking at the second half of the year with some increase in demand happening. So we are seeing oil move up a little bit. That doesn't mean this is going to be a smooth ride. Like I said, we're only inching in with some exposure into oils in the portfolios. We will be increasing that exposure a bit over time, except for those people who have asked for, and I'm going to talk a little bit more about this in a minute, but that socially responsible, keeping that out of the portfolio. I have a lot of people asking for that now, so we're not putting that into the portfolios. But we have started to add it to those who want it or are happy having it in the portfolio. We do, as I mentioned, we do expect things to improve over the next little while. Gold start to gain again, with everything going on, the uncertainty, the inflation we're seeing rise in food prices globally. That's just inflation rearing its ugly head, and we expect that to continue. So, gold will continue to increase, and we still maintain our positions in the portfolios there that we've had since even slightly before the pandemic. So gold will continue to be a strong hedge against that inflation. So what do we look at for 2021? Well, as I mentioned, dump the dollar, stay away from the US dollar if you can. Emerging markets, keep in mind emerging markets, they do well in a recovering economy. They grow faster than established or mature economies. And case in point, one of the best performing overall markets globally was South Korea last year. Early stages recovery as the economy started to reopen again. That's just going to grow more and more, and we see that area dominated. So we have it in the portfolios. It's done amazingly well. We'll likely see that increase as a position in the portfolios early 2021 here. Vaccine hopefully will make things in 2021 be more open. As I said, I'm not going to say normal. I still think we're going to have challenges, but I think less and less. But that's going to reopen more sectors. So, we have to start looking at those ones that were really hard hit and haven't recovered. Be cautious on those, and I'm going to dive a little bit more into that, but we'll take a look at that. And then we'll talk a little bit about some trades and some of the biggest investment houses that kind of agree upon. So the mighty dollar, as I mentioned, we expect that to kind of go down. We don't expect any kind of recovery there until mid-2021. Near the Fed's committed to keep the interest rates low. Trump's reduced kind of trade and political, Trump's trade and political tensions have supported the dollar a little bit. But as we go into a new government that's probably going to shore up some international tensions and trade going forward. Talking about returning to the Paris Agreement and things like this. That support for the dollar will continue to erode it a little bit. As I mentioned, kind of mid-2021. So emerging markets, really take a look at that. We're looking at tourism and commodities taking off with that weaker dollar. Focusing on, countries like China, Mexico, Brazil, South Africa, even Russia, more and more, Ukraine and Mexican oil, Pemex. Really like, if you are interested in oil, Exxon, one of the larger and, great balance sheet. They also did some acquisitions through this. So they've improved their position while oil was lower. So if you want to take a look at that, we're starting to move oil slowly, or the street is moving oil into overweight. I'm not overweight yet, but I'm certainly moving into the portfolios, as I mentioned. Emerging markets, we're currently at market weight. So that means, how much emerging markets represents GDP-wise of the globe, but we're looking at increasing that in the coming months. Central banks talked about keeping that cheap money flowing. So that's really important, right? We've talked about this through the whole pandemic of, what affects the markets? Well, liquidity, cheap rates continues to grow the market, and that's what we've had, and that's going to continue. As I mentioned, that 3-year goal, but at least for 2021, I think we can confidently count on cheap rates as far as money goes. And then inflation, that's the offset. We have to keep a really close eye on that, and of course, keeping a close eye on jobs, how that's doing. ESG, or ethical and social governance investing, grew massively. It's in the portfolios where we've increased it. This is only going to take off. Joe Biden and the Democrats have committed $1.2 trillion to the US to shift to that technology, start spending money there. And this is not just kind of, I've had someone actually say, oh, well, that's just, people who are interested in that. It's not. I've said a few times that the technology is now cheaper to introduce, whether it be cars, solar, wind, tide, all of renewable energies. All this is now becoming cheaper than fossil fuels to produce. When you get cheaper, all of a sudden you can take your beliefs out of it and just say, that's cheaper. That's where we're going to invest because we can produce it, more effectively, easier, at a lower cost. And that's what we're seeing now. That's going to continue through 2021. It's our main theme. We've increased that, as I mentioned, in the portfolios, and that goes to the electric car movement. We talk about why that's growing. It's not just people saying, "I want an electric car for the environment." It is cheaper to operate, maintenance-wise, recharging-wise. Then those vary, depend on regions and costs, but it is getting there, especially with the cost of the cars coming down dramatically. And in fact, the UK has said by 2030, they're not going to allow the sales of fuel cars. Quebec has said by 2035, they're going to stop the sale of fuel cars. So that's only going to accelerate. And I highly believe we're going to see more and more of that, especially out of places like California, which is very, very progressive when it comes to, vehicle emissions. And we talk about China. China's already committed, if the US rejoins the Paris Agreement, they'll accelerate, their clean energy spending, and that includes the vehicles, because of course they had small issues with how quickly their population, their middle class grew through the last decade or so, and they're moving more and more. So they're skipping a technology, they're skipping that infrastructure, moving to that. So we just introduced a gray ETF into the portfolios. It's called CARS, and the symbol is CARS. And it's not buying Tesla, it's buying the supply chain. So the manufacturing, what goes into manufacturing an electric car. It doesn't matter who's building it. they're going to need these metals, they're going to need these parts for the batteries, they're going to need this for the development or construction of those cars. So that's an area I think you really need to look at in 2021 and highly focus on it. Technology, Biden again, the Democrats want to invest in areas like big data, the cloud, right? Very important to have that in the portfolios. 5G, AI intelligence. I mentioned electrical cars, robotics, cybersecurity. We had cybersecurity for the last year in the portfolios. It's done amazing. We just had that solar winds breach in the U.S. It's only going to increase spending in cybersecurity, and we've actually doubled our position in the portfolios in cybersecurity here in December. It's an area that's going to massively grow. And when I talk about technology, I'm not always talking about Apple and Microsoft, kind of the big players. Really look at where technology is disrupting an existing industry. We saw it last year. Restaurants, they the ones that have done well switched to online. They switched to those home meals. Fitness, the Pelotons of the world with the home fitness. Apple's now come out with Apple Fitness. Amazon's coming out with Apple Fitness. More and more of this online, being able to not need to pay or be in a big expensive gym, being able to convert that industry to a cheaper, faster way to deliver things using technology. Healthcare, we've had the technology for doctors to use technology to have online consultations. But it was never used. In fact, in BC here alone, and this is true of many countries, Canada and others, doctors did not have a way to bill to healthcare for a online consultation. They had to invent that in March. And obviously, it's been around. The technology has been used in rural countries and third world countries for years. But now the investment's going into that, so we're disrupting technology. And I just recently used it. I don't know if you can hear in my voice. I'm getting over a cold. I was tested. It's not COVID. But after, it lingered for quite some time, and I used the online, talked to the doctor. We did, he listened to my voice. He listened to a cough I had, and he was able to diagnose, that, my cold went into my lungs and, all those things. So I didn't have to go in. And obviously, not everyone's going to take advantage of that. But for people in rural communities or older people with, disabilities and aren't able to, get to the doctors easily, this is going to be a game changer. And on top of that, to add into that, the technology, it's not there yet, but it's going to be very quickly. I know my watch, can tell the doctor live what my heart rate is, what my blood pressure is, what my oxygen levels are, what my temperature is. All these things are good. We're going to be able to plug in. So that when we talk about technology, look at technology that's disrupting an existing industry, not necessarily brand new technology, but something that's coming in and making something cheaper, faster, and easier for people to use. And that's the other thing that we want to look at 2021. 2020 forced companies to become innovative with technology, to use it even though it had existed prior, but to use it more effectively. And that's where that's where we're going to see growth in 2021. We talk about e-commerce, the companies, the massive shifts they had to as the stores closed. We've seen massive shifts, and that's going to continue. And as they get that initial investment in there, it becomes more and more profitable for the companies as they move along. So that's what we see for 2021. And I do see growth. I notice I got a couple of questions here. I'm going to try to bang them off. But I want to try to get to them today. So one of the questions is, I say dump the dollars to what currency? It really depends on what you're looking at. If you're looking at from an investment perspective, as I mentioned, I really like the pound sterling. I think it's still undervalued. Euro, I think as they kind of get out of this post-Brexit, it's also going to recover. Canadian dollar, I don't think you're going to be overly hurt. As I said, it's probably going to get stronger here as we get into the summer months, and then we'll have more clarity around the direction for the second half of the year for the US dollar is kind of where I would focus things. And certainly if you're looking at kind of, spending your money. So, if you have a portfolio that's heavily weighted US dollars, you might want to look at bringing it back to Canadian, if you're going to spend your dollars in Canada. So, always keep that in mind. And a lot of investments you can get hedged to the US dollar, especially if you're using things like ETFs. And I know not everyone loves ETFs, but do keep in mind they can be powerful, especially in concentrated ETFs. As I mentioned, that CARS ones for the electric vehicles. I think it's 15 positions, well diversified, and that goes for the cybersecurity position that we've held in ETF, which again is about 15 positions, very concentrated, and you can get those in hedge, so you can protect against those. So when it comes to currency, I would definitely look at Europe. I think those ones have been held fairly undervalued. If you want to be a little bit more risk, look at the emerging markets, and again, you can get a little bit more growth oriented. I shouldn't say like not necessarily high risk, but again, I would go to a basket of emerging markets currencies because those should see some really rapid growth as the global economies recover. So with that, I'm going to close it off. I told you this was going to be a long one, but I appreciate your patience if you're still around. Listen, we're back to weeklies on these. We'll keep you up to date on everything that's going on. We're going to come back with our Friday videos, which are deep dives into different topics. Stay with us. Go to mikeonmoney.com if you want to review any of these things. If you have any feedback on things you'd like us to talk about or take a deep dive into, we'd always love to hear that. I did get some great comments of people, asking when we were coming back over the holidays, saying, they appreciate these. So thank you for that. Your feedback helps us make this better and better for all of you. So with that, happy 2021. I'll talk to you next week, and take care of yourselves out there. Thanks, everyone.